Welcome everybody and good morning. This is the Saturday morning Viper trading webinar. If you're here to learn about trading the futures markets using the Viper tools, you are absolutely in the right place. Let's go ahead and knock our standard disclaimer out so we can get started. All communications from Viper Trading Systems are for educational purposes only. Futures and Forex trading does involve risk and there is a risk of loss. Nothing contained in this webinar or other webinars, including the live trading room, are to be construed as investment or trading advice. And of course, everybody in here does know that you do trade at your own sole discretion. All right, so today's topic is confidence, building confidence in your trading, and I think we all would agree that that's pretty important to trading success. So without further ado, let's get over to some charts. I'm going to ask. I'm going to try to do something a little different with this webinar that we haven't done before, and I'm kind of hoping it's going to help a little bit with everybody. Let's start off by I want to ask a question to the team here, and I see people are still coming in. Don't worry, yeah, we're just literally getting started here, so you haven't missed anything. What if you were to type in one or two trade types that you like, that are sort of your go-to trades? What might those be? I'd like to start off with that. Think about the different trade types we have, trade entry types, getting into the market. We won't talk about targets and stops and trail stops or anything like that right now. Let's think about entries just for the time being. Got a Russell chart up here. Each morning or each day or whenever you trade, what's sort of your go-to trade? What do you like the best? All the different types we have. This is the Russell on Friday morning, by the way. Ooh, we get a good mix coming in here. Interesting. Here, in fact, let me jot a couple of these down real quick. Okay. More mix of entry types than I expected. Let's see here. MG says he likes shorting an up move on a trend line break. Oh, okay. So trend line breaks. Excellent. That's a totally good entry. Trend line breaks. Okay, what else do we got here? We got a couple of predictor calls here. Weldon and Mario like the predictor. Excellent. Weldon and Mario are predictor traders. Okay. Brent likes the mid-band pullbacks, so we'll put Brent into the mid-band trade type deal here. Okay. What else do people like here? An immediate pullback past support and resistance from Adam. Okay, Adam. Support, resistance, pullbacks. Ooh, we got an interesting mix of trade types here. It's different than I expected, to be quite honest with you. Walter likes the mid-bands too, along with Brent. Okay. Mid-band retraces trade, so Nasir likes the mid-band too. Okay, thanks, Nasir. Oh, yeah, was there a problem with the link? Hey, my apologies. I was wondering where everybody was. When I opened up, there was hardly anybody in here. Oh, I must have messed. You know what? I redid the title. My apologies, everybody. It had the wrong time. Oh, darn. Was that in the email or was it in the link itself? Oh, no. Yeah, because we had a big sign up and nobody was coming in. I was like, what's going on? Oh my goodness. Hold on. Let me take a look at this. My apologies, everybody. Oh, jeez. Oh, man. Sorry about that. The website link is correct. Oh, so when you go into the web link, it's correct? Email has the wrong times? Oh, jeez. Sorry about that, everybody. Yeah, if you're late, don't worry about it. We're just literally getting started. And, this is recorded, so whoever got into... Oh, I'll be darned. Look at that. You know what? I didn't change that. I don't know why that got changed. Anyway, my apologies, everybody. It's okay. This is recorded. We'll make sure everybody gets, it should be posted within, I'd say, an hour or two of the of finishing up here. So my apologies to everybody on that. So back to our question. If you came in late, the question was, what are your favorite types of trades? And we got everything from trend line breaks, predictor trades, a whole slew of traders, folks in here in the team, like mid-band trades, obviously, a couple of support resistant pullback trades. Now, let me now as a follow-up question to that question, if you take your favorite trade that you like to take each day or each night or whenever you trade, what would be your confidence score level on it on a level from 1 to 10? 1 being the weakest, 10 being the strongest. What's your confidence level in taking those trades? So for instance, 1 would be, I like the trade, but I'm fairly nervous about it. 10 would be, I'll take that trade all day long. I'm not worried at all about it. And of course, anywhere in the middle. 5 would be mildly confident about your trade entry. 10 most confident, 1 least confident, 5 in the middle of your favorite trade type entry of all the ones that were listed here. Now, interesting scores coming in here. Mario is saying he has a 6 to 7 confidence level. 8 from Adam, that's pretty high. Weldon, 6 to 7, a lot of 7s. 9 for a scalp from MG for his favorite trade of the trend line break. 7 for the second target. Michael says, I have an 8 confidence level for all the mid-band trades. Oh, interesting from Pat here. Only a 5 on all trade setups. Huh. Wow, that's not what I expected. I thought the scores would be much higher. So let's keep going with that thought before we get into trades here, and we're going to get into trades in just a minute. Why do you think that your confidence level isn't higher? I mean, why? I expected, like, maybe I was way off here, but I was sort of thinking 9s and 10s across the board were the extremely high confidence level. I see some folks coming in late. My apologies. Links were a little screwed up. We are recording this. You haven't missed much. We're still sort of kicking things off here a little bit. And we're going through a series of what the favorite trade entry types are, what the confidence level is from 1 to 10, and why it isn't higher and how we can get the confidence level higher. Oh, gee, some interesting answers coming to that question. Weldon says, I'm a pessimist. Well, I'm going to make note of that because, ironically, I think that, Weldon, that comment is more pervasive with traders than you think. I'll circle back to that in a second. Oh, here's an interesting answer from Mario. Head fakes and trend changes kill me. Ooh. Head fakes and trend changes kill me. We're definitely going to address that today in a big way. Does anybody else fall into those categories? The 2 that have popped up so far from Mario are head fakes and trend changes kill him. And Weldon says he's just a pessimist. In other words, my translation of understanding what he's saying there is, I may have a fairly high confidence level in my trade entries, but just naturally have a negative skew on the view of things that it's probably going to work out against them. That's my take on that comment. Oh, here's an interesting one from Nasir. These are comments I did not expect. My confidence is not higher, Nasir says, because I cannot handle a 12-tick stop with the close of a bar, and then it becomes 16 or 17, and it's hard to recover from that. So you're saying full stop outs. Okay. Mark just typed in fear of loss. That's a big one. In fact, I think I might table the fear one because I was talking to Gary on Friday, and I think next Thursday night, I'm going to dedicate an entire hour to addressing fear. Yeah. In fact, I'm going to table that one just for now, okay? But definitely count on next Thursday. We're going to circle back and talk the whole hour about addressing fear. Couple more and then we'll move on here. MG says, I don't mind stopping out on a trend change, but I have yet to develop the confidence to take trades when it flips the other way. Oh, anybody else fall into that category? He says, I don't mind taking a loss on the first trade from a trend change, but then it's hard to recover and take more trades once you get popped on the trend change. Oh, we're getting a lot of yeses to that one. Oh, okay, we better talk about that. Adam says, I don't know why, but on a big move up or down, I hear you say take the targets out of the way. The market's handing you money. I actually get really nervous and trepidation sets in. Oh, wow, that's good feedback, Adam. I didn't realize that. Anybody else feel that way? Here's what he said. I don't know why, but on a big move up or down, I hear you somebody say take the targets out of the way, or market's handing you money today. I get nervous and trepidation sets in. Huh. Pat says it's easy to lose $300, but it's hard to make it back. Wow. I never flip. I find myself chasing trades when it's a fake, thinking it's actually a trend change. Wow, so this trend change thing's a big problem, sounds like. And head fakes. Head fakes and trend changes have come up repeatedly here. MG says, interesting feedback on the opposite side of the table. I feel just the opposite. When I hear somebody say a big move is underway, I look to get where I'm going to get in. All right, that is some fantastic feedback, everybody. I've got lots of things to address here. Let me think about the best way to do this. I think I'm going to have to circle between a number of different charts to try to cover all these topics. So let's get started with the Russell. Now, chopped up at the opening. Yeah, we hear that a lot. Hold on a second. Let me jump right in here. All right, so let's start from the beginning and sort of work our way out from there, if I can. We're going to take Friday morning on several instruments here, and for the sake of simplicity, you know you can toggle the predictors on and off. For the purpose of what I want to show, I'm just going to leave them off for the minute, okay? We know that markets oscillate between two different price action types. You have what's called, and everybody knows this, so I'll just state the obvious. You know, you have range-bound price activity, where the markets stay in a range, right? We've known it, we've seen it countless scores of times, right? And then we have times when the market trends. It can trend up or it can trend down. In the case of the Russell, of course, we see that the trend was down. Now, the open of the market was right here. On most of you know I'm in California, so the Pacific time here. So 6:30. Equity market open was more or less right in this area right here. Now, one of the challenges is, a couple of the challenges that were underscored by your comments are the fact that you're coming out of basically here all night. For instance, here's midnight on going into Friday morning right here. So this is the beginning of the European session. The Russell was stuck. All the equities, I think, were pretty much kind of stuck in a range like this. Now, if you're watching it shortly before the market opened, what happened right at the opening that caused you to think that the trend resolution was probably going to be down and not up? Was there anything that happened right at the open? Here's the open right here. So where I'm going with this is markets go from, as you're pondering and looking at the chart, I'm going to type in a couple of things here that might resonate with you a little bit and might be able to sort of, maybe go into your subconscious as you look at markets and think about what they're doing and then how you're going to trade them. So we know that markets, when we talk about price action, can go from range to uptrend. This is basically the combinations, yes? So let's think about this for a second. So we got range to uptrend, which is, we have range to downtrend, which is what we got on the Russell on Friday morning. We have cases where you can get uptrend to downtrend, right? And the last one, of course, would be downtrend to uptrend. So in other words, there's no range in between. It's either a V top or a V bottom, or there's some price action in between that causes the market to change, which sounds like is a problem for almost everybody in here this morning, to uptrend. All right, so these are the four types that can occur. We're either going to be in a range and we're going to go into an uptrend. We're in a range and we're going to go into a downtrend. We are in a uptrend and it reverses to a downtrend. And then conversely, of course, we're in a downtrend and it reverses to an uptrend. Now, all of these scenarios seem to, in one way or another, cause issues for almost everybody in their trading, right? What I was looking for in terms of the comments at the opening on Friday on Russell was that I think everybody would agree that right in here at the open, the market put in a lower high. In other words, it did not get all the way back up to here. If it did get back up to here, we would have the inclination at the open to think that the range could continue, right? We always say that when we draw the lines. That has to be sort of pervasive in our thought, is the fact that as long as you stay within the confines of these lines here, you are said to be range bound and you would trade the range. We covered that quite a bit on last Thursday, right? You have to decide if you're going to trade the range, how you're going to trade it, and I'm not going to get into detail on that this morning. You can go back and watch the Thursday night one where we covered this in great detail. So we have to have our sort of spidey trade sense up. And when you hear comments in the room to the effect of that was a higher low or a higher high, that concerns me, or that was a slightly higher low, we didn't get back to the top of the range, I think it's going to roll over here. That's what those comments mean. And not only is it important to listen to comments like that as the market's doing what it's doing, but it's also important for us to do what? Okay, in other words, you have your chart up in, I mean, it could be anything. It could be crude, it could be gold. I happen to pick the Russell. But let's say you have the Russell chart up and you're listening to comments in the room. What do you need to do yourself as a trader to make decisions? I'll circle this real quick, whether you hear it in the room or not. How are you going to build confidence if you just wait for somebody to tell you in the room what's going on? Is that in and of itself going to change your trading capabilities? Hearing somebody say it in the room? Is that going to make you a better trader? And I'm not trying to be facetious here. I'm quite honest with everybody here. Yeah, you have to notice this yourself, right? The fact that this made a higher low and consolidated at the midband should be something that occurs to you as you're looking at it on the chart in front of your own eyes, whether you hear it in the room or not, right? I mean, if we're talking about building confidence, the first way to do it is to be able to empower yourself to see these trades on your own. And you've heard me say scores of times that the room is there for confirmation for something that you already see yourself. So if you have your spidey sense up and awake at the open, you put the lines on the chart here on the Russell as an example. You see that it was in a range since last night. You make note of the fact that at the open it is a lower high and consolidates right at the mid-band and sets up a beautiful short trade. Now, some of you, and I understand this, don't like to trade the open. You like to wait a few minutes because you're nervous that you're going to get whipped around. It's going to stay in this range and then head fake and jerk you all around in here. I understand that. So here we drop for the first like 10, 12 minutes. And I know these were called in the room. So this was your first leg of the trip down, right? This is the first leg. And then what happens right here? I know Gary called this. I can't remember whether I took a couple of these. I caught part of this move down, but I didn't catch much or all of it. Yeah, it's a mid-band trade, a mid-band rollover. So that's a trade entry. I think almost everybody in here said they liked the mid-band with a confidence score of 7 to 8 or higher. So this was a place to get in. Now, we all love mid-band trades when it kisses the mid-band and then rolls over. Isn't that like the cat's meow go-to trade? I mean, I don't know about everybody in here, but I love this kind of trade. I could eat this for breakfast all day long. Yum, yum, yum. Give me some Fruit Loops. Seriously, I'm not kidding. I love this trade. This is my favorite go-to by far trade. I would put a confidence score up in the 8, 9, 10 area of taking that trade on a trend. Retracement around the mid-band. Just flat, if you master that trade alone, will make you money. I mean, I don't know what words to say about it. Look at this trade here. Now, granted, it came down and hit the bottom of this swing and then pulled back up and rolled. So technically you had kind of a second chance to get in when it came back up into here. It didn't check the mid-band and then it rolled over and dropped. Now, let me advance this and ask another question. All right, I'm going to advance it and then I'm going to ask a question. All right, here we are at 7:35. So the second trade entry developed between basically about 6:45 and then it didn't really break until about 7 right in here. Came all the way down and dropped for precipitously for about a half an hour. Now, all due respect, if you had not entered this trade, you know, up in here somewhere, you know, it would have been tough to get in it because there were almost no retraces here. I mean, it just went straight down. This was about, I'm sorry, 14 down to 6, about 80 ticks. Times 5, one contract would have been about $400 on that trade, depending on your entry and exit. So far, we've had 2 trades on this chart. How many trades do you need to take every morning to make money? Here we are at 7:30. Market's been open about an hour. 1 chart, 2 trades. How many trades do you need to take every day to make money? How many? So now, you know, I'm not being quipped this morning. Just to be clear about this, I'm talking very seriously about this. How many trades do you need? 1. Right. That's not a complicated question that takes 4 paragraphs to answer. maybe a way to look at it is a net of 1, right? I mean, maybe you take 2 and 1's a loser. Maybe you take 3 and 1 or 2 are losers. But in order to hit your goal or profitability, you need a net win of at least 1, right? Now, if you had taken either one of these and You know, this one dropped from 18 to, I don't know, 14. There's 40 ticks in that trade, and there's, I think he said 80 ticks in this one. One lot on here would have been about 200 bucks and about $400 on that. If you took both, it would have been 600. If you took this one, it would have been 200. If you took that one, it would have been 400 in 2 trades. If you are anywhere near your goal after 1 or 2 of these trades, 2 lot would be even more. This would be 400, that would be 800. So technically on 2 lot, you had $1,200 worth of trades. Should you keep trading, yes or no? We have traders, and I know those of you who come into the room every morning hear this every morning, and we're not making it up. I'm not going to call out names, but you've heard the names. They're done by like 7 o'clock, 7:15. I've hit my goal. I'm off to play golf. I hit my goal. I'm going to breakfast. Just went slightly over my goal. I got to go to work. You hear the names every morning. Gary and I don't make that up. We're reading you what's being typed in the room. How are they doing it? Greg, I know you're one of them. I'm going to spill your name. I know what you're doing, and I know how you're doing it, and I know why you're making money like that. You're doing this. You're putting those time boxes on there, just like we're talking about here, right? Put the time box on. You turn the time box on in OT. Everybody knows what that is, right? Time box. You put the time box on. That's the time part. I don't have OT up here, but we show how to use that, right? You set the time to turn on at a certain time. It paints a region at a certain time. Takes the trade, long or short, out of the box. How many time boxes do you need? 1? 2? Greg's in here. How many do you take, Greg? I think you take 3, right? 3. Let's just pause for a second. I'm glad that Greg's in here. Michael does it too. Several of you do it. Hey, just curious, what times do you set? Let's go ahead and put that right on the chart here, because I think that's good. That could help some people. By the way, here, you don't have to set the time element yourself within OT, which would automatically paint it. You could physically do it yourself with an OT box. I'm just sharing what they're saying here. Let's see here. Michael does it too. Here, I'll put the box right on here. Everybody will benefit from their comments. We'll just put it right on here right now, what they're doing. Okay, we got a couple of them coming in here. 8:59. This is Greg. 9:31 and 9:32. Is that Eastern time? What time frame is that? What time zone are you in, Greg? Eastern? Okay. And then Michael does it too. Michael, what time frame are you in? 7:59? He's in Central. Okay, so he does. I'm just sharing you the different times. So this is Greg up here, Eastern time frame. This is Greg. And Michael is down here. Michael does the same thing. He does 7:59. Oops, 7:59. 8:01. And 8:31. Now, just curious, guys, just real quick here. So this is Michael. What instruments are those on? When he's in Central. He's in Central. So you have to adjust this to your time zone, whatever time zone you're in. Make the appropriate adjustment. What instruments, just curious, are these on? We'll start with Greg. Greg, I know you do oil, I think, don't you? Is this respectively? So it's CL, TF, and GC, each one of these? Okay, so he's CL. I believe this is correct. TF and GC. So you're going to have to look in your own time zones. TF and gold. Yeah, this is exactly how they're trading these boxes, Pat. You can have OT draw them automatically for you, preset the times in the time setting in Object Trader, and it'll draw the box automatically and take the trades. And then Michael is saying here he trades crude oil in the Russell, so I'm guessing 759 is the crude oil, and then the Russell's the other ones. Is that right, Michael? I'm guessing it looks like that. Oh, 801 is crude oil also. Crude oil and TF. Okay. You don't have to necessarily make notes on this. I mean, this is recorded. You can circle back to this. Just another comment from Greg on the way he handles these is that he takes 5 ticks profit and then stops to break even. So you're putting 2 lot on these guys? 2 lot? Let's just round this box out here so we're all clear about what we're talking about. So 2 lot, oops. First target's 5 ticks. And then stop to break even. All right. Michael, a question here. Oh, sometimes he does a 4 lot. Okay, so you can vary your risk on this depending on your risk profile. Michael does a 3 lot with a 5 tick and a 2. So it's very similar to this. And then they'll trail after that. Yeah, no, there's no touch plus or anything in here. There's no touching, and it's a straight up box. Does the box, curious guys, automatically paint like this? I haven't done the time box in quite some time, but it just engulfs the current area, which is what you could do with an OT box anyway. Just using 630 as an example, right? Yes. Okay, he says yes. So, I mean, you can manually do it yourself. It's the same thing, or you can have OT time do it. I mean, there's no mystery here. Obviously, this is you know, this is how to use the tools. I mean, trade entry is in a close outside the box. So it's just the same as if you drew an outside close object trader box, Pat. A couple more questions from the team, then we're going to move on. Initial stops are what, 10, 12 ticks, guys? Greg, Michael? $12 tick initial stops? Okay, good. So that's out of the box on object trader. Then 5 tick target on the first one, stop to break even. Pretty straightforward stuff, not complicated. They're saying in here sometimes less, sometimes more, so sometimes they'll make some adjustments. So listen, this isn't, you know, we're not saying to go out Monday morning, load the boat, put these time boxes on, and then forget about it and hope it all works out. That's not what we're saying here, okay? So, excuse me. Sorry about that. What we are saying here is that, you know, we say it in our webinars that to perk up and look for trades at certain times in the morning, and I have a feeling that what happens is that sometimes, you know, we get busy or we get distracted or we're looking at a different chart or something comes up, and then you're not really focusing on these times. These are critical times here. You know, right at the market open, right at the crude pit open, you know, news, 7 a.m. Pacific, news time. These are times when you're going to make your money. And as we said a few minutes ago, all you needed to get is 1 or 2 of these, to nail 1 or 2 of them or 3 of them, and you're done. The whole goal is to not trade all morning and try to get to 9 o'clock and take as many trades as you can. Quite the opposite. The goal is to make money as quickly as possible, minimize our exposure to risk, get in and out of the market as quickly as possible, bank the coin, and be done. Okay, let's come over. Any questions on this? I'm going to shift to another instrument now. Everybody got this? I encourage everybody to experiment with this on come Monday. And I'm using the words experiment, meaning equals sim. Okay, go in and sim and play around with this a little bit and see if you can get some of it to work. He said, Greg said, crude made 35 ticks on the 859 box right out of the box on Friday. 35 ticks on 1 lot's $350. 2 would be $700. I would venture to say that some of you or most of you in here, if you made $700 in the first 10 minutes, you'd be done. You wouldn't need to be looking for all these other trades, right? I mean, that is the goal. That is our goal of trading. It's not to look for all the trades and pick out all manner of trade for 2 hours. It's to get in and out. Let's get gold on here. I don't see any more questions. Stand by. By the way, just a quick question for the team here. How many of you, since we've introduced gold into the live room, actually trade it now? Just a show of hands. Is anybody actually trading gold now that we put it in the room? And sort of a follow-on question, do you like it? I know some days it can be choppy. Friday was really bad. I'm going to look at it right now. Oh, quite a few yeses. MG Weldon, Pat, Mario, not yet, but I'm looking into it. Quite a few people, not trading, but following it. Okay. Okay, good. All right, so I guess we'll keep it in the room then. Now, Friday was kind of ugly, uncharacteristically ugly on gold. Let's take a look at the chart. We did have some news. What was the news on Friday? Wasn't it GDP or something like that? Let me take a quick look here. I'm trying to remember Friday morning. I think it was GDP in the pre-market. Because the reason I'm saying that is look at 530 over here. See the shotgun at 530 right here. From here to here was shotgun on gold. And I think that was yeah, GDP numbers, which were weak. See this? In the pre-market session. Yeah, right here. It says 430, but it was actually 530. This has to be adjusted. But it was weak, uncharacteristically weak on the GDP. So gold didn't like that. It shotgun around a little bit. But then the ironic thing was, it comes 630, open to the equity markets, it was still stuck in this range, right? Here's 630. Let me take the predictor off just for a second. I mean, if you're drawing your lines in the pre-market like we say we should do, right? We had a swing more or less up in there in the pre-market right here, right? This would have been your line for the upper part of the range. And then you had a couple of support areas down in here. Right here like this. This is right after the open, right before the open and right after the open. It sort of touched the bottom of this range, a little double bottom here. I can't recall whether we called any trades on gold in we might have called one or two in here, which I don't know if they got, I don't know if we took this bounce and took that. I honestly don't remember. I just to be truth be told, you know, it was stuck in this range. Is this range tradable? What do you think? Yes or no? Is this range tradable? I mean, you only had one bip down to support here at 632. You know, I mean, you might have caught that bounce. I don't know. I don't think I did. And then, you know, you've got kind of a, you know, what is this? Looks to be about a 7 to 18 tick range around the midband. Gary called out a long at 732. He might have called along here. I think he might have taken this. I might have, yeah, that's right. And then came up, pulled back. I think we did have one or two trades. It was the long trade. Yeah, you're right. Who said that? Greg? Yeah, I think he actually took this. And I might have jumped in on a pullback. I think that was the only trade I took here. See, we pull back in a little bit to the support area and we got a bounce, 66. I think I got in around 60, just under 67. It was choppy though. I mean, you know, there were a couple of trades here. They weren't very good, and it was extremely choppy. For instance, when you came off of this long trade, wherever you got in, it pulled right back in your face. That was characteristic of Friday. Some days are like that, right? As soon as you get up a little bit, it pulls right back in your face. So your entry was here, and it came and checked it, and then up to the top of the range, and then we closed the room, and that was about it. Yeah, I did take that. Yeah. Yeah, that's right. Gary did call that a Barry. He did call that bottom at the bottom of support there and bought that. I didn't get in until later over in here. I think after 7. Yeah, so that's how that worked out. I mean, looking just quick feel from the team here. Did anybody trade gold, or did you just stay away from it? What do you think of this chart? You like this chart? Is this chart scary and you want to stay away from it? What do you think? This was the whole day here. Here's the pre-market. Here's the open. Here's all. This is how it ended right here. Tough. Stayed away, Weldon. MG says I just stayed straight out of gold on Friday. Okay. Yeah, I know a lot of people did. A lot of traders did. I don't blame you. I mean, you know, when these little quick bips down came, you had to be sort of quick to get in or box it or get a market entry or use a trend line on it. Pat says I traded and I wished I wished I didn't. Yeah, I don't blame you. Okay, let's move on. Let's get the quick poll. I got two charts here, NASDAQ and Weimer. What do we want to see? Nazi and Wyme. Which one do you want me to tee up next? Go ahead and just type in cast your vote, and then whichever one I'll pull from the other screen real quick here for you. Let's see. Ooh, tough Nazi. Counting Nazi votes. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. Okay, we got like over a dozen Nazi votes, and we only have one Weimer. Okay, we'll come to Weimer, but let's start with Nazi then, is the consensus of the team. Excuse me. Okay, now a word of caution on NASDAQ. If you trade NQ, you know what we're talking about here. There are times where Nazi can be your best friend, and, you know, truth be told, there's times when NASDAQ can be a whippy bird and not a good friend. Let's take a look at an example here. Here's NASDAQ on Friday. Let's just orient you real quick, and then we'll spread the chart out and look at what's set up. Okay, so here's overnight. This is midnight Pacific on Thursday going into Friday morning on NASI right here. Here's the pit open, 6:30, equities. And then the room was open until, I think, a little after 8, so that would have been way over here. The thing I remember for NASDAQ is that on Friday, you can see here that, let me just take, for sake of simplicity, take that off. In the pre-market session, you could have had some lines on the chart more or less in here. You know, and there was another one sort of down in here. Pre-market. Yeah, and you can make the case there was another one here. Roughly. You get the idea. What made NASDAQ particularly tough to trade on Friday was the fact that shortly after the open, we did get the short opportunity right in here. But it snapped back right in your face, right? Everybody remember that? Came right down to support. Let's blow this up and talk about the trades real quick. Okay, let's go back to what we talked about before. Are we in a range here? Are we downtrending? Are we going sideways? Are we heading up? Is this going from range to uptrend? Remember the 4 categories we had on the other chart? Are we going from range to downtrend? Are we going from range to range? Are we staying in a range? What did NASDAQ do on Friday? Just taking a look at the chart. Did it stay in the range the whole time? Range to up, range to down? Nazi. Kept bouncing, stayed in the range. Range to down, says MG. Range to down, yes. Range to down. But it fought it the whole way, didn't it? This is what I'm talking about. So let me be more specific on this trade, how it played out. Because I remember I got in here, I got whipped around a little bit. It popped down like this. And if you weren't able to get in on the break here, I'm saying the break here, it popped back up and gave you another shot, and then went down and very quickly caught the bottom of the range, and then right back in your face. I mean, it wasn't, you know, so you had some oscillations in here. I mean, it just didn't go straight down. Every time it looked like it was going to break, it came right back in your face. Don't you hate that? Don't you hate that kind of trading? Doesn't it drive you nuts? It does me. You know, I'm a person. I'm not a robot. It drives me crazy. You know, you get in, you think it's going to break, you think it's going to run, and it bips right back in your face, takes your stop out. rolls over. Now let's blow this up and talk about this right now, because I'm sure this is an area of major concern that might be problematic for some or all of you. Yeah, it was, excuse me. Sorry about that. MG saying it was totally counter to the Russell. So what was happening is, let's bring back, most of you remember the Russell chart, right? Bring that back real quick. So while Nazi's jerking around all morning long, this is what Russell's doing. Just on down, smooth as a potato. On down with you, right? Methodical retraces into the midband, another fresh lows, takes it out, bounces right off the midband, more lows, 40 tick drop, more lows, 20, 40, 60. Thing dropped 120 ticks. What the heck is Nazi doing while this is doing this? Whipping in your face. Now let's be specific about this. Here we come up just above the midband and we roll. That might have gotten you in. You might have boxed that, and maybe you got a scalp, maybe you didn't, but then it bips right up in your face and stops you out. Don't you hate that? Then it does the same thing again. Then it's stuck at the midband. You think it's going to roll and break. Does another quick sort of jerk down, right? A little bit lower high, and you're sort of thinking everything's going well, but then boom, right back in your face. How many of you hate this? Right here, where I'm circling my cursor. Am I describing purgatory or HE double toothpicks for most of you? Isn't that the scourge of trading? It looks like it's going to break, it doesn't. Looks like it's going to break, it doesn't. It whips you around, it jerks you around, and then the darn thing breaks down. Doesn't that drive you nuts? Hey, listen, I just said it a minute ago. It drives me crazy. I hate it. So if you get in here and you take a pop, well, first of all, I'm just going to state the obvious. This is not a place where you load the boat. We're not leveraging up in here, right? I mean, if you decide to trade this live, we're talking about 1, 2 contracts tops. So that if you do get popped, you're not getting creamed. That's obvious, right? I mean, we all know, you know, the place that you leverage up and put a lot of contracts on is this type of price action right there. I know I keep going back to this, but I want to contrast the two. Here, this is load the boat material. Leverage up, yes? Here, you know, when I get popped like this, I generally stand back and just stay out, just stay out of it. I don't let it take me for 2, 3, 4 pops. I just don't do that anymore. I used to fight the market, revenge trading, all that sort of stuff. Some of you know that, some of you are still doing it. I just don't do, homie, don't play that game anymore. The thing jerks me around and pops me one time, especially over here where I'm trying to get short and it's bipping in my face, bipping in my face, bipping in my face, and I get bipped out. No thank you, adios. See ya, wouldn't want to be ya. I'll come back when you sort your you know what out. Right? Don't keep fighting this, okay? It's a sucker's battle. You're going to get creamed. It's not worth it. I mean, over here, eventually it worked itself out. It went into a nice methodical down range, and we got some nice shorts off of here. I remember making money off of this, remember? Remember? Everybody remembers this, right? Anybody in the room, you remember, we were called shorts right off these rolls. Here's where you made your money. It was in a range, but we were shorting it and covering, right? Shorting and covering, shorting and covering. Did it like 3, 4, 5 times. Then we closed the room, and it got all funky again over here. So this is characteristic in NASDAQ. Excuse me. Some of you Nazi traders, you know this, right? If you've dealt with NASDAQ, it can be a beautiful thing on some days, a nice trending and just as nice as all the rest of them. Other days, it's a whippy little bird and can spank you around. And if you don't get control of it, it might not be an instrument you should trade. Look at something else. I normally stop after 1 hit. Yeah, rude. In fact, I believe I stopped trading NASDAQ until it got into this range here. Once I saw this clean, fairly well-defined range with support down here, remember we were calling out support down by 76. So we were saying to cover down there, short the rollovers, short the rollover, short the rollover. You got a couple of them. And then at 8 o'clock, it got all funky again. Yeah, so that was that. Okay, so a few of you want to look at Weimar. Let's squeak old Wyoming in here, and then we can see, you want to try to squeak Wyoming and crude in? Anybody? So we can get 2 more in real quick. I know we're almost out of time, but I think I might be able to get real quick 2 of them. Anybody want to see crude too? Where's that Weimer chart? Ah, here it is. Hold on, let me get Wyoming on down here. We don't have to do crude. I can just get Weimer in here. Excuse me. All right, here's Wyoming. Hey, you know, it's the same thing on Weimer. I'm going to show you the Wyoming chart. Yeah, okay, we'll do. Let's do Weimer real quick, and then we'll pop crude oil up. By the way, I've seen a couple of folks come in late. Don't worry about it if you missed most of the webinar. This is recorded. We'll get it up as soon as it renders. We'll get it posted up there. You can download it and watch it. There was a mix-up on the time somehow when I changed the name of the. I didn't change the time. Somehow it got changed, and so my apologies. And both in the email and in the link itself. Actually, I don't know if I can show Wyoming real quick. My data is corrupt from the first part of the day. All I have is Thursday into midnight and then 10 o'clock into the close. But somewhat like NASDAQ, you can see it went into the prevailing trend was pretty much down to sideways. We talked about this before. The primary mode of entry on a range where it's down to sideways is shorting the top, covering at the bottom of the range. We all know that, right? If the trend has been down, the background is red, the bars are predominantly red, mid-band and all the bands are stair-stepping down and it goes flat and red like that, our primary mode of entry is shorting the tops and then covering down its support, fading the bottom and covering, just like NASDAQ, just the same way we looked at NASDAQ a minute ago, okay? All right, let's get, I want to get crude up here real quick. Let's talk about crude. See if I can squeak old Crudabilio in here real quick. I know I covered a lot today, but you know, I wanted to get through some important issues here, and I also wanted to talk about the boxes that Greg and Michael use, the different trend types, the fact that you don't need to take every trade. You can just nail a couple of winners right out of the gate and be done. You can go into sim or go do whatever you want for the day. That's really our goal here. That's the purpose and the whole reason we trade. Now you might say, well, why don't we just shut the room down at 7 o'clock? Well, here's the thing. You got to realize not everybody, you know, starts trading at 6 a.m. Pacific, right? We got scores of people from all over the world dialing into the room. So we have to keep watching the markets and calling trades because some people come in late, some people leave early, and so we have to accommodate different time zones, right? But just because we're calling trades and leave the room open does not mean that you need to stick around and keep taking them, right? Think about it. Lots of traders are gone by 7 a.m. Pacific, 7:30, they're done. All right, here's crude on Friday. Midnight was over here. It was a little choppy early. Now, I didn't trade crude at the pit open, so you're going to have to help me here. That was right here at 6 o'clock. Excuse me. 6 a.m. Pacific was right in here. Oh, so this would have been your box. I don't know if Greg and Michael are still around. 555, 559, your box would have been more or less like this, right? The mid-band looks like to me, right? And then here's your pop. You got 2 nice pops on crude. Textbook. Got this pop right here. Got your 5 and then whatever peeled off at your stops. Yes, that's what happened, Michael? Okay. You got another sort of a little bit larger box. In fact, I remember this at 7:30. I think we took this in the room, didn't we? Popped up here and then rolled. Got filled short on one of these bars right in here, and then you got a nice short all the way till about 7:45. As I recall, I think I took this one. I know Gary did. So there's your second short right there. You got a third one right at the close of the, as soon as we were getting ready to close the room, another roll off the mid-band there. Had 3 nice shorts on crude. Now here I want to talk about, let me blow this up for a second and talk about this third crude short. Michael, you caught both of those? Barry says, yeah, Gary drew that at the pit open and caught that short. Okay, good. Yeah, I think you mentioned that. Let's talk about this third one. Now, sometimes the mid-band boxes can be a little choppy. This is a case where it was not, depending on how, we talked about this on Thursday. If you haven't watched the Thursday webinar, you should, because at the end of it, we talk in detail about drawing these boxes. Why is it so important to engulf the wicks of the candles? For this reason right here, right? See where we get like a little bit of sort of wicking above the top? Now, and just to reiterate what I said on Thursday is if you did bar close, activated bar close in OT inside of this box, the close of that, depending on when you turned it on, of course, the first bar that closed down would have got you short right in here. Now, true, it is a more aggressive entry. Sometimes the entries are superior to the bar close outside the box entries, no question about it. However, sometimes these little sort of bips up here like this, see this? Sometimes they turn into this, where it goes all the way up into here. It takes a full stop out. We don't want that. Everybody in here said earlier today, this morning, you don't want that. You're nervous. You don't want these head fakes. So one way to avoid it is I engulf the wicks. Excuse me. Hold on one second. Engulf the wicks. Do not, and I'm just saying personally. Now, if you like bar close entries, you feel they're superior to your box close entries, then by all means use them if they're making money for you. But it might be one of the issues that's causing you to get stopped out. If you're taking the more aggressive bar close, then you're getting in on these bars right here that are technically still inside the box. For me personally, I like to see confirmation and follow through outside of the box. Now, this is another trade that makes you nervous. Even though it closed outside the box, we think we're home free. We're up in the green a little bit, and then bip, it comes right back in our face up to the mid-band. Now, notice what happens here. One of the things that might give you some little bit security and feeling more confident about these trades is the fact that this swing and all these predictors held. See the wick of this candle? So for instance, in the room, you might hear something to the effect of, as long as it stays under 30, we're good, meaning 49.30. See this swing right here? So when you hear those kinds of things, that's what we're looking at. We're looking at swings. As long as that swing holds, we're good. And explicitly what that means is the stop is there, right? And if it takes it out, we're out of it. We're not going to let it go all the way up in here, hand us a 12, 15, 20 tick hit. We don't do that. Don't ever do. If you're doing that right now, you need to try to work yourself away from that. Don't be afraid that if it breaks a swing and stops you out, regroup, step back there, and look for another trade on another chart, or another trade that you're trading. In this case, it stayed under the swing, and we're good. Rolled over and gave you a very nice trade. Down into here. You could have missed all these other two and caught this one and be done. Let's see, you got filled at 20 and it came down here to 80 and maybe you stopped out here 90. I don't know, 30, 40 ticks. 250, 300, 400, one lot. Could have taken that last trade. That was it. One or two or three of them could have made your morning. $10 a tick on crude. All right, everybody. I hope you liked this. Hopefully it was helpful. Try to put some of this, I'm going to turn the recorder off. Thank you for